Good afternoon, guys, and welcome to the podcast, wherever you are in the world. Today, I have a guest from Grand Rapids, Michigan, talk to us about stocks, equities, stock picking, Josh Fuhr. I'm really happy to have him on and discuss these topics around financial freedom. And so, Josh, welcome.
Yeah, thanks for having me. I'm excited to talk about this.
Yeah. And briefly chronicle your journey, and we'll dive into the questions in the conversation.
Sure. Yeah, so I started out of college. I started a supply chain consulting firm that was doing really well and got closed during COVID. So I pivoted, tried a couple different business models after that to see what I wanted to do next with my life and ended up in stock trading. So I've been day trading for about 5 years now. And recently I started a newsletter that helps others learn how to pick stocks, shares expert stock picks with the community. So it's something I really enjoy. I love the patterns that are out there, the analysis that you have to do. It's like a big puzzle. So yeah, I've really enjoyed this chapter of my life.
Interesting. And we'll start off the bat is for the listeners and viewers, they're intrigued by this. What is your client avatar, people that come to subscribe to your services, products? What are they running away from, running towards? What are they frustrated with, fed up with to get them to pay money to work with you?
Yeah, I think our client avatar is somebody who's below that accredited investor threshold. So these are Wall Street strategies that are pretty easily available to those accredited investors, but people that still have a significant amount of money in their brokerage or their retirement account, and they're looking to grow beyond the 5 to 10% a year that they're getting with their advisor. So they're looking for a change. They're looking for what can we do differently to achieve some better growth. And there's people that have chosen to invest in stocks on their own, haven't had the best experience. So trying to figure out like, how do we do this? What's the method to this to find those returns? So I'd say that's makes up the most of our clients.
Mm-hmm. Interesting. And so one thing that really came to my mind was, obviously you and me were anti-Wall Street. You say their advice sucks, which I agree with. And one thing is, how do you, because now you have Ken Griffin's Citadel hedge funds, and they've got the flow of information. They have all of this data information. They have money, they have regulations, everything's on their side. How is the average investor that you described going to be able to compete with the big guys when working with you?
Yeah. So what we do is we take a lot of the information that's publicly available from those institutions and what's called tail the whale. So that means you're following along with what these big institutions are doing. A lot of times they have to disclose certain trades, or there's clues out there on certain websites like Unusual Whales where you can see what are the big players doing? Where's the big money going to? And then you do your own analysis. And does this fit with how I invest? So you can go out and see what the big funds are doing, what the insiders are doing through their insider trading that they have to share with the public. And you can go out and learn from the techniques that they're using, because you can't really compete with them, but you can go along with what they're doing. And that's a great strategy to find the right stocks.
Interesting. And how is the average investor going to compete with these algorithms now? Because you talk about picking this, we'll talk about stock selection, but these algorithmic, they know the rates, they know the liquidity, the flows, they can buy and sell. So how are they going to compete, and how is stock picking advantageous in these situations?
Yeah. So what I've noticed is a lot of the algorithms are doing what's called high frequency trading, where they're looking for that difference between the bid and the ask. And they're looking for these real small differences out there where they can beat the market real quick, make a quick buck, and just do that over and over and over again and make money that way. So it's important to acknowledge that these algorithms exist and try and understand what exactly are they doing, and getting on their team instead of fighting against them. How do we get on their team? So identifying that there's algorithms that buy at certain technical indicators, let's say a 50-day moving average or a 100-day moving average, 200-day moving average. Those might look like just random lines on a chart, but knowing that these algorithms are out there buying every time it hits a 200-day moving average is a great way to get on their side. So you have to have more context than that, but that's a great way to not let those algorithms affect you and have a trade turn against you.
Interesting. The next question I have for you is, what is your algorithm or way of selecting stocks? And you also have this quote, what is your number one stock pick and why? I'm just curious. Again, this is not advice. We're just discussing.
Yeah, our strategy is real simple. We rely on what's called long-term support and resistance. So support is an area where big players are basically not letting the price go below that number. When you pull up a longer term stock chart, when you zoom out to 5 or 10 years, you start seeing these patterns. You start seeing that maybe the stock never goes under $5. Maybe it never goes under $100. And so we mark those on our chart as what we call a zone of interest or area of interest. And when price comes into that zone, then we start doing analysis on that. And we look for simple things like trend line breaks. So it's something that people that have never done technical analysis doesn't seem real to them, but you can just draw a 45-degree angle on a chart. And when the price moves past that line, you have what's called a change in character. So that means like the bulls are in control. We want to go up now. So we look for some confluences at when price is at that support level, the trend line has broken, and then we're looking for support from technical indicators. A lot of people use the technical indicator as their primary. Let's say the RSI is too low or the MACD is crossed over, things like that. We use that as like a secondary way to support our trade. Yeah, that's the basis of our strategy, is just going and doing that research of what's a support, what has a change of character, and then where are those indicators aligning with what we're seeing.
Interesting. And you have on your profile, I'm just curious, what is your number one stock pick and why? I just want to get a feel for what people are thinking.
Yeah, I think my favorite stock pick for this year, the heaviest position that I have is actually NIO. It's a Chinese electric vehicle company. And so when people think about like fundamental analysis versus technical, like there's crazy stuff going on with the US and China right now. We don't know how good is the Chinese economy. They hide their numbers the way we hide our numbers. And this stock is beaten down. It was in the hundreds during COVID, some meme stock, but they've got some interesting technology. But really the chart is telling a story where it's beaten down and you have to step into that fear. And this has the potential to go to $10. I think it's somewhere around 3 to 4 right now. It has the potential to go to $10 pretty quickly. And from there up into $50 or $100 after that. So a ton of upside potential with that one.
Interesting. Again, this is not financial advice. China, Trump, tariffs, inflation, EV, AI, these are very highly volatile. So just for the audience, listeners and viewers, just keep that in mind and don't just go and buy it and lose your money. The other question I have for you is, because I study that's most successful traders. I also study the most successful investors. And one thing is this idea called time in the market, where basically long-term investors, like if you look at some of positions, if you just held on to them versus trading in and out, you do much better. So how does one balance these two, investor versus trading mindset? And what do you do when, for example, sounds like you are solely a day trader. What do you do when you reach a criteria, you take your profit or take your loss, and then you see the stock like rebound, go the opposite direction, or like you take your profit and the stock just skyrockets again? How do you deal with these types of situations?
Yeah, that's something that happens all the time, where you take profit and the next day it blows right through it and it goes another 20, 30%. And you just have to have a system. You have to have a repetitive system where you're going to win more than you lose, and your losses are your gains are more than your losses. So when you do those calculations on winning plus gains, you're always on top. So you just have to be comfortable with your system, and you know that over time you're compounding money, that you're growing your account. And you just have to say, I missed that one. It could have gone further, but my system didn't support it. And I think when a lot of people play earnings. So a lot of the mega caps last week had their earnings, and people like to gamble. It's like putting on a parlay. I'm going to bet whether Apple's going to go up or down, whether earnings are good or bad. That's not a system. That's just gambling. You can have a 10% up or down day on a mega cap after earnings, but you're never going to be successful doing that. So I like to focus on kind of the slow and steady. How can we make 2, 5, 10%, and then keep compounding that throughout the month and throughout the year.
Interesting. And on the subject of returns, again, like if you park your cash in just a CD or money market, like 4 or 5%, I think last year that was kind of like the risk-free rate. And then you mentioned like the S&P is 8 to 10%. What is your thoughts on 8 to 10% compound? Is that enough to offset the effects of inflation, volatility, opportunity cost, taxes? What kind of return should people be expected to be getting each year to either stay afloat or get ahead?
Yeah, that's a great point. And something I think about a lot is that those returns are really just barely beating inflation. So your real return underneath that is somewhat 1 or 2%. And you're not getting ahead by doing that. So with our system, so there's two concepts here. I do day trading, and then I also take those techniques and apply those to a bigger picture, a bigger time frame so that investors can play along. So they're not expected to day trade, be in and out with me. This is more, how can we grow our money over the course of months or years? Investors should be able to return like 50 to 100% in a year if they just learn some basic technical analysis. Beyond that, I have my day trading account, and then my retirement accounts I treat as the way I would treat the users of our service. And that typically does anywhere from 100 to 300% a year.
Oh, yeah. And like I said, what I obviously should be aiming for more and more gains just to keep up pace. And the other question is, somebody listening to this, they go to your Substack, they want to learn, like you mentioned, learning technical analysis. How much time does this take to learn technical analysis and be like semi-proficient, semi-decent?
Yeah. So again, it depends on how deep you want to go. So if you're looking like from that investor's perspective, how do I make a couple trades a year, spend like an hour a week doing this? So you can really learn that in maybe 20, 30 hours total. You can get a good grasp on technical analysis and start finding good stocks and stop making these impulse decisions. I've been on front of the charts in 8, 10 hours a day for 5 years. So I think the 10,000 hour rule applies there. But yeah, if you really want to master this and make it your profession, you're looking at a huge investment. But really, if you just want to get better about picking stocks, entering the market, exiting the market at the right time, that's doable in under a week's time.
Interesting. What's your number one piece of advice for people wanting to increase their investment returns?
Yeah, I think it would be to learn this technical analysis. I think turn off the TV, stop listening to the narratives. I was looking today at the Tesla analyst recommendations, and Tesla's price right now, I think, is somewhere around 270. The analysts have targets between 100 and 450. So what are you going to do with that? Like, how does that help you become a better investor? A third of them say buy, a third of them say sell, a third of them say hold. What do you do with that information? That doesn't help me at all. So just learning some of these basic concepts like support and resistance, open up a chart. Most people have never seen a stock trading chart. They might see the Robinhood, the line graph that goes up and down, but there's a lot of complexity underneath that. And once you start zooming out, you can see these patterns. You can see, okay, this never goes under 100. It never goes over 200. And then you can start making some educated guesses about, maybe I'll try and buy this at 100. Maybe buying it at 195 isn't too smart for me because it's probably going to go down at 200. So zoom out, learn about support and resistance, learn about trend lines. And those are probably the two easiest things that you can learn to get going in this.
Excellent. The other thesis you have is beat the market in 2025, and you have stock strategies you can start today. What is that?
So yeah, those are just like I mentioned, learning about those basic technical analysis, tuning out the noise. There's been a lot of noise this year around tariffs and all that. And you just have to learn. I think it was Warren Buffett that said something along the lines of buy when others are fearful and sell when others are greedy. And that's really true. We had almost, I think, 15% bounce this month during the tariff sell-off. And what was interesting is that it found an area of interest. So we had pre-marked as this is a great buying opportunity. This is where buyers are going to step in. They do not want the price to go below this line. It didn't go below that line, and buyers stepped in really aggressively. But a lot of people would have said, I'm going to wait until maybe let's see if this resolves. And I don't want to invest right now. I'm a little nervous. Now you're paying 15% more than somebody who had that pre-planned line in the sand where they were going to get involved. And that's what this is all about, is having a plan and executing it.
Interesting. Yeah. So the other question I have for you is, this is not for the audience. This is not advice, but what are your thoughts on Bitcoin and other cryptocurrencies at large? And we're just discussing themes and concepts because this area is very volatile and a lot of scams. So what are your thoughts on Bitcoin versus the other currencies?
Yeah. And I think an important thing to point out with Bitcoin is that it follows technical analysis really well, almost better than some stocks, because it doesn't have earnings to come in and shake things up. Before the ETF started, it was almost exclusively technical analysis. The ETFs have changed that a little bit, and Wall Street being involved, there's a little bit more manipulation than they used to be. I don't know a ton about the technology. I've traded it. I'm actually long Ether right now. The chart just looks good. Ether's been a huge laggard. It's been frustrating every other time I've touched it. So I'm probably going to regret this, but the chart looks too good. So I'm in a leveraged ETF for Ether. The symbol is ETH. Everything the pattern is there for me. And my rules are, when the pattern's there, you execute. I did see that there was some rotation happening in crypto. So the Bitcoin dominance chart is showing the top. Some of the altcoins have the potential to go further than Bitcoin here. The Bitcoin chart looks great, though. I think I wouldn't go out and buy it today because it's like in the middle of that range, but I'm expecting it to go up from here.
Interesting. And the other question the audience maybe is, why do you select stocks versus, for example, looking at options and futures?
Yep. So I do a little bit of all of the above. I like stocks. I love using ETFs. Probably my favorite thing to trade is leveraged ETFs. So they have 3x leveraged products that when the underlying stock or index goes up or down, it goes up 3 times as much. So that's for people who have a system. Things like that can be really beneficial to 3 times leverage isn't a lot compared to people that are leveraging 50 to 100 times in crypto. But it's enough to multiply your returns without some extra capital. But I've traded futures, I've traded Forex. Options have always been an issue for me. I never get the timing right. With options, you have to have the direction, the time, you have to buy enough time on the contract. That's just never been the right fit for me. So I've dabbled in it and I've decided to replace that leverage with leverage ETFs.
Interesting. Yeah. Final question before we direct the audience to your Substack and to your social media. What are your thoughts on the outlook for 2025? Trump, interest rates, tariffs, inflation, wars, etc.
Yeah, so the stock market's sitting at a really interesting point right now. And tomorrow we have the Federal Reserve. They're not expected to cut. They might do a surprise cut tomorrow. But a lot of people are saying the market's going to take off as soon as the Federal Reserve cuts. And I don't think that's historically been true. I think that it's going to be good for smaller cap stocks. But there's the charts are showing some issues out there. There's going to be a big housing crisis. The housing charts are showing that. The real estate charts, some of the commodity charts are showing that we're going into a recession. So I'm short a couple of commodities like natural gas. So yeah, it's hard to say. I wish that I knew what happened tomorrow, and there's so much uncertainty with that. But one of my other biggest positions is an ETF called RETL, RETL. That's a leveraged retail ETF for retail stores. And so as soon as those tariff announcements are made, especially in countries like Vietnam, Cambodia, probably not China yet, but some of those other Southeast Asia countries, I'm expecting retail stocks to really take off once that pressure is alleviated. That's that model I talked about earlier. Buy when the fear is really high. Retail has just been crushed lately, has the most upside. So yeah, I think it's interesting. I wasn't really trading during Trump's last administration, so I've heard from others that it's crazy and you are waiting for the news cycles and all that. So we'll see how this one goes.
Yeah. It's interesting because Trump is just this black swan. You always have to factor in because what he does affects the markets. Yeah, really interesting. And if people wanted to connect with you and reach out to you, learn more from you, how could they do that?
Yeah, so the best place is to reach out on Substack, and we have an offer that we extend to our podcast guests. So if you go to portfolioconsultant.substack.com/podcast30, you can get a 30% off either your monthly or your annual subscription with us.
Yeah. And one question for the audience is, why did you choose a community on Substack versus Instagram or Twitter or Facebook or LinkedIn?
Yeah, so it lets us be a little bit more in depth. So our recommendations have charts in there. They have buy zones, sell zones. Why do we pick those sell zones? What's the narrative that could potentially come up here? But we're actually in the process of building our own app to manage all this. That makes a lot more sense. But for now, Substack just fit our audience better so that we could reach out directly via email when those alerts are ready for our audience to take action.
Excellent. Thanks so much. I really enjoyed this conversation, and I always love talking to investors and talk about financial freedom. And thanks so much for coming on.
Yeah, thanks for having me.